Alright, so let's take a look at the homework problems. Again, if you have not attempted the homework problems, go ahead and stop the video and try these on your own, and then once you've done that, then watch the video to see how we solve these problems. Question number 1. Fairmount Travel Gear produces backpacks, sells them to vendors under their own label. Alright, and then the question gives us the cost of materials for $27, the cost of labor is $18, variable overhead is $7.50, fixed overhead is $9 per unit, and the way they get that is they have fixed overhead of $405,000 per year, $405,000 per year, and they divide that by the estimated number of units or backpacks they're going to make, and that's 45,000. So 405,000 divided by 45,000 is $9, and so the total cost of its backpacks is $61.50. All right, and one of its customers is Riverside Discount Mart, and they want to special order 3,000 backpacks. Now they usually sell backpacks. Riverside usually sells. Fairmount Travel Gear regularly sells their backpacks for $90, but Riverside is asking Fairmount to sell it to them for $63. So the sales price is going to be a lot lower. Also, they're not going to have the same amount of materials, labor, and variable overhead. It says here that it's going to cost them an extra $6 in materials, an extra $2.50 in labor, and an extra 70 cents in variable overhead cost. Fairmount has the capacity to produce this special order without affecting its regular 45,000 units, but it will have to make a one-time rental of special testing equipment, and this rental is going to cost $7,500 and would allow Fairmount to test up to 5,000 units. So that means that it's well within the 3,000 units that that Riverside wants to buy. So we have to prepare a schedule of these two different scenarios. All right, so we're going to have the status quo, which is the regular 45,000 units, and then we're going to have the alternative. All right, the first thing we're going to calculate is our sales revenue. And remember, the fact pattern tells us that we generally sell these backpacks for $90 each, and we sell 45,000 backpacks. So if we do $90 times 45,000, we get 4,050,000. But we're not going to put 4,050,000. This schedule tells us to do thousands of dollars instead of the actual dollars. So instead of putting 4 million, we're going to put 4,000. So again, it's supposed to be $4,050,000. We're just going to put $4,050. Okay. So basically, you're chopping off 3 zeros at the end of the number. All right. The next thing we're going to calculate is materials, and again, we're going to take this straight from the fact pattern. It says materials are $27 each. Per unit times 45,000 units, and that's going to give us 1,215. Again, that's supposed to be 1,215,000, but they're chopping off the 3 zeros at the end, according to the instructions, probably to make the graph or the schedule a little bit easier to read. Alright, so that's materials. Labor is going to be $18 times 45,000, and that's 810. Variable overhead, that's going to be 750 times 45,000, and that's going to be 337 and 50 cents. So if you add up these three numbers right here, add those three up, your total variable cost is going to be $2,362 and 50 cents. Okay. And now that you have your sales revenue and your variable cost, now you can calculate what your contribution margin is. And contribution margin, all that is the 4,050. You subtract the 2,362 and 50 cents, and you get 1,687 and 50 cents. So that's going to be your contribution margin for the status quo. Now we subtract our fixed costs. And that's just going to be your $405. Remember, in the fact pattern it said that the fixed cost for the year is $405,000, but since this is the schedule wants us to chop off the 3 zeros at the end, then it's 405. So we do contribution margin of 1,687 and 50 cents minus the fixed cost of 405, and so we get our profit, our operating profit of 1,282 and 50 cents. All right, so these are the answers for column number 1, the status quo. All right, so if you proceed without doing the special job, here are your amounts. All right, but now we're going to compare this to the alternative. All right, so the alternative, if you read the fact pattern, it says that we're going to continue with our 45,000 regular units. So actually, all of these numbers still apply. The column 1 numbers will be considered in column 2, which is the alternative. But now we're just going to add the costs and the revenue for the extra 3,000 units. All right. So for the alternative revenue, we are going to remember that we're going to sell units for $63, and we're going to do 3,000 of those units. All right, so $63 times 3,000. It's going to be abbreviated as 189. So this 189 right here is going to be added to this 4050. All right, and then we're going to get the total of 4,239. Okay, so again, we're taking the revenue from column 1, which is 4,050. We're adding it to this 189, which is the additional revenue from the additional 3,000 units sold, and we get 4,239. All right, now I do the same thing for materials. We already have an amount calculated for the 45,000 for materials in column 1, but now we have to calculate the materials cost for this extra 3,000 units. Now, the fact pattern says that for our regular backpacks that we create, materials is $27 a backpack, right? And then in the fact pattern it says that the modified backpacks is going to cost an extra $6. Okay, so we're just going to do $27 plus $6. That gives us $33. All right, so our special order backpacks are $33. We have 3,000 special backpacks, so that's going to be 99, and then so we're going to add this 99 to this 1,215, and that's going to give us 1,314. All right, so in column 2, the materials amount is going to be 1,314. All right, so you can do the same thing for labor and variable overhead. It's the same thing that we did for materials. Just take the amount in column 1 that we calculated and add it to the amount for the special order and add those together. And then so you're going to add your materials, labor, and variable overhead to get your total variable cost, get your new contribution margin. So all of that is going to be the same as we did in column 1, so I'm not going to do that for you. You guys go ahead and do that, especially since I'm running out of room on the screen. Now, a difference here is going to be fixed costs, okay? Because on column 1, fixed cost is 405. It tells us that for this special order, we're going to have to rent a new piece of equipment for $7,500. So instead of 405, we're gonna have to include this new 7.5 as abbreviated for 7,500. So we're gonna add this new fixed cost to the old fixed cost, and we're gonna get 412.5. All right. So so again, we don't have to do any calculations for that. To get to this 7,500, that's just given to us. So we're going to add those two together to get our new fixed cost for the alternative. All right. So you guys go ahead and calculate all that. What you'll see at the end is once you get all your numbers and add it all up, you're going to see that your profit for the first column is 1,282.50, but the alternative is 1,278.90. So for B, the question is, do you agree with the decision to accept the special order? Well, when you look at the profit of the status quo versus the profit of the alternative, you see that you're getting less profit if you take this job. So then your answer should be no, because you're losing money. Now, in real life, there's going to be other considerations. maybe this customer that is making the special order is very important to you, and it's going to lead to a long-term relationship, and you're going to be able to sell more to this customer in the future, then of course real life is a little bit more complicated than what we study in the books. But again, when you're just looking at profit, then your answer should be that you're not going to take that special order. All right, and then C says, considering only profit, determine the minimum quantity of backpacks in the special order that would make it profitable. So if you did the alternative column, you got a contribution margin of $1,691.40, and then the difference, the third column, is $3,900, or written as 3.9, right? So that's the difference in contribution margin. Well, that's your total difference in contribution margin. So, but the question is asking how many, determine the minimum quantity of backpacks in the special order that would make it profitable. So, so since you have additional contribution margin when you produce the alternative, that means that you do make a little bit of money off of this these backpacks, because you're counting. I mean, you have a positive margin whenever you're doing sales minus variable cost. Now, the reason you're losing out is because your fixed costs are a little bit too high. But the question is, how many backpacks do you need in order to make it profitable? What you're going to do is you're going to take this 3.9, or really it's $3,900, and you divide that by the 3,000 backpacks that you're gonna sell, so that your contribution margin is $1.30 per backpack. Okay, so if you have $1.30, remember the contribution margin is what contributes to your profit, but before it contributes to profit, it contributes to paying off your fixed cost. So the question is really asking, how many backpacks do we need to sell of these special order backpacks to be able to pay off that $7,500 extra fixed cost? So what we're going to do is we're going to do $7,500 fixed cost, divide that by the contribution margin of $130, and we're going to get 5,769 units. So you would have to sell 5,769 of these special order backpacks to make that special order worthwhile. All right, question number 2. If you like algebra, you're gonna like this problem, because it's just straight up algebra. It says Sid Skins makes a variety of covers for electronic organizers and portable music players. They think that they're gonna sell it for $21, and they would like a profit of 20% of cost. So the question is, what is the highest acceptable manufacturing cost for which SIDS would be willing to produce the cover? All right, so let's just start out with an equation. What's our general equation here for sales and cost and profit? And all it is that sales minus cost equals profit, right? It's pretty common sense. Okay. It tells us that our sales is $21. It doesn't tell us what our cost is, and it doesn't tell us what our profit is either. But it does tell us that our profit is 20% of cost. So so let's abbreviate cost as C and profit as P. When we rewrite our equation, we're going to say $21 minus cost equals profit, and instead of putting profit here, we're going to put 0.2C, right? Because profit equals 20% of cost. So we can either write P or we can write 0.2C, the same thing. All right. So from here, all we have to do is solve for C. So we're going to add C to both sides, right? So then now our equation is $21 equals 1.2C. Now we're going to divide both sides by 1.2, and we get $17.50 equals C. All right. So again, this is algebra that we learned back in 7th grade, I think. So you might need to brush up on that a little bit, but it's a pretty straightforward calculation to do to figure out costs, right? Because if sales minus cost equals profit, as long as they give you 2 out of the 3 variables, you should always be able to figure out the 3rd variable. All right, question number 3. This question is one of those make or buy questions. Should we make a product or should we buy it from someone who makes it already? Mobility Partners makes wheelchairs and other devices. It says for years it has made the rear wheel assembly for its wheelchairs. So it makes wheelchairs, but there's a part of the wheelchair that it makes. But recently, another firm says to Mobility, "Hey, we can make those rear wheel assemblies for you, and we can save you some money." So so Mobility has to figure out whether or not it's going to let this other firm, Trailblazers, make the assembly for them, or if they're going to continue to make them. So it says here that Trailblazers offers to sell these rear wheel assemblies to Mobility for $220 each, and that's a little bit cheaper than what Mobility is spending, because if you look at the fact pattern, it says that Mobility spends $50 on materials, $106 on direct labor, $32 on variable overhead, and $94 on fixed overhead. So for Mobility to make these rear wheel assemblies, 2,000 of them, they're going to cost them $282 each, whereas they can buy them from Mobility for $220. So right off the bat, it kind of looks like that's a simple sort of decision, no sort of calculation necessary, right? Because it cost them $282 to make it versus $220 to buy. But actually, you got to dig down a little bit deeper into the numbers. Remember that we have 2 types of costs, generally speaking. We have variable costs, and we also have fixed costs. So so actually, we're gonna do this schedule at the bottom, and then we're gonna see whether or not we really should buy from Trailblazers or keep making it. All right, so we're going to start again like we did on the 1st question. We're going to have a status quo. So for status quo materials, it costs us $50 for materials, and we're going to make 2,000 units. So that's $100,000. Labor is 106 times 2,000, and that's going to be 212. Variable overhead is $32. And fixed overhead is 94. That's 188. So when you add all of those up, you have a total of $564,000 in cost. Now, the status quo is $564,000 in cost, and so now we're going to take a look at the alternative. Now, the alternative is just to buy. Remember, just to buy the assembly. So to buy from Trailblazers, that's just 220 times 2,000 units. So that's going to be $440,000. Right? We're not going to spend any money on materials or on labor or on variable overhead because we're not making those items. However, we do have to take a look at fixed overhead here. The fact pattern tells us that it costs us $94 in fixed overhead per unit, right? So 94 for the status quo, 94 times 2,000 was 188. But the fact pattern also tells us that if we don't make these assemblies ourselves, it will eliminate $80,000 of fixed overhead. So instead of $188,000, we're going to subtract 80, so we're going to have 108 for fixed overhead. So now we add the 440 plus the 108, and we see that it's going to cost us $548,000 if we buy the units from Trailblazers. So that's what our chart's going to look like. Our schedule. Part B says should Mobility make the rear wheel assemblies or buy them, and when you're just considering profit, it looks like the status quo is a little bit more expensive than the alternative. So it looks like we should take the alternative and have the Trailblazers make them. However, the question tells us that we're going to continue making them unless the alternative saves us at least $20,000 a year. So in this case, we're spending $564 if we make them, or if we buy them, it's $548. So that is not quite. That's only what, 58, 68. That's only 16,000. Okay, so it's not quite the $20,000 threshold that they were looking at. So so the answer for B is going to be that we're going to continue to make it. Now you might ask, why would a company do that? Well, I mean, there's always other factors to consider when you're making something. You have the final say. You can make little tweaks if you need to, that sort of thing. You have complete control over your assemblies, rather than if you buy them, then you're at the mercy of the other company, and they could make them a little bit differently than what you would want. So there's like I said, there's a lot of factors to consider. In this case, the question said that $20,000 is their threshold. If it's less than 20, then they're just gonna pay the little bit of extra to make the product themselves. But if they can save more than $20,000, then they're gonna take the alternative and let Trailblazers make the assemblies for them. All right, question 4. CompDesk makes a desk with a chair for computers. So they're making computer desks and computer chairs. The desk is manufactured in building 1, and the chair is manufactured in building 2. It tells us that building 1 can produce 600 desks, and they actually do produce 600 desks. Building 2 could produce 750 chairs, but they only produce 600 chairs. So why is that? The fact pattern tells us that the company will sell a desk only with a chair and can sell 750 desks per month. So they only sell it as a combination. They will only sell you a desk and a chair. You can't just buy a desk, and looks like you can't just buy a chair. You do have to buy the combination. And so this unit, the desk with a chair, sells for $300 each, and has a variable cost of $125. All right. So question A: is there a bottleneck at CompDesk in building 1 or building 2? So what is a bottleneck again? A bottleneck pretty much is an indication of a constraint. So what is the constraint here? The constraint looks like it's going to be building 1, because building 1 is producing 600 desks, and that's the capacity of building 1. Can't produce any more. Building 2 can produce 750 chairs, but only produces 600, and now we can see why. The reason why is because they don't sell the desks apart from the chairs. So if they're only making 600 desks, they also only have to make 600 chairs. So building 1 is constricting or constraining the activity in building 2. So there is a bottleneck in building 1. All right, B says that the production supervisors say that they can take the building 2's capacity. They can increase it by 150 desks per month. So building 2 generally makes chairs, but the supervisors are saying, hey, we can make some desks in here too, and we can make 150 extra desks in building 2. And they say that doing this on the weekend, that's not going to affect the sales price of $300. But the variable cost is going to go up a little bit, by $50, and fixed cost is also going to go up. So now we have to figure out what our differential operating profit or loss is going to be. So differentials, remember, differentials is what changes between the status quo and the alternative. Okay. So if something stays the same, like we talked about, rent, generally speaking, stays the same. That's not a differential. So that's not going to be considered. It's not going to affect our decision making. But in this case, we do have a difference in revenue. If building 2 is able to produce 150 desks, then we are assuming that we can sell 150 more of these of these desk chair combos, right? So if we're selling these desk chair combos for $300, and now we have 150 more that we can sell from these additional desks that were created, then our differential revenue is $45,000. Okay, but we also have to consider our differential costs. It tells us here that our fixed cost is going to go down. I'm sorry, it's going to go up. Fixed cost is going to go up by 30,000. So fixed cost is going to go up by 30,000, and then a variable cost let's see what it says. It says that the variable cost is going to increase by $50. So the fact pattern tells us, generally speaking, our variable cost is $125, but now it's going to increase by 50. Right? So now variable cost is going to be $175, and we're going to multiply that by the 150 desks, and now we get $26,250. So we have $45,000 in revenue. We have an additional $30,000 in fixed costs, and an additional $26,250 in variable cost. So that means that we're actually going to have more of a loss. The loss is going to be $11,250. So our costs are 30 plus 26. That adds up to 56,250. That exceeds what our revenue, our additional revenue is. So it's going to cost us more to build these extra 150 desks. All right. So B2 says, should CompDesk produce desks on the weekend? And according to our calculations, that answer should be no. Now part C says, forget about B. Here's another independent situation. It says that CompDesk could add additional equipment and workers to building 1. All right, so building 1, again, is the building that was creating the desks. So now they're saying we can create 150 extra desks in building 1 if we add some additional equipment and workers. And it says that sales price and variable cost is not going to change per unit, but fixed cost is going to go up because remember we're buying additional equipment to make these extra desks. So now we have to calculate the differential profit or loss under this scenario. So the differential revenue, that's going to be the same as in B. Remember that was $300 times the 150 desks, so that's $45,000. The cost, though, let's see, it says that fixed cost is going to be increased by $22,500. So that's going up a little bit. Variable cost is not going to go up, but you do have to consider it. The fact pattern says that variable cost is $125 per unit. So we multiply that by 150, so it's going to be $18,750. So now we do the math here. 45,000 minus 22,500 minus 18,750, and we get a profit of 3,750. So for C, C2, should CompDesk add the additional equipment and workers to building 1? The answer should be yes, because when we do that, we end up with a higher profit overall. So it seems like it would be a wise decision to add the additional equipment and workers to building 1. All right, question 5. Now this question has a long fact pattern, but actually not too bad of a question. It says Shireen Nilly manages a company that produces wedding gowns. She makes standard dresses as well as custom dresses. And then it gives us a fact pattern of her custom dresses and standard dresses. For March, it looks like she's planning to sell 10 custom dresses and 20 standard dresses. And it gives us the sales revenue amount. So from here, if you wanted to, you could calculate how much per dress she sells, right? It says that custom dresses she's going to sell 10, and the total sales revenue from that is $50,000. So 50,000 divided by 10, that would be $5,000 a dress. And then for standard dresses, she's going to sell 20 dresses for $30,000 each. So if you divide 30,000 divided by 20, you get 1,500 per dress. All right. But to continue on, it says that Miss Nilly already has the 10 custom dress orders. Says that depreciation is $1 per hour based on the usage of the machine. So this is something you may have not seen before. For depreciation, we usually have some sort of purchase price of a machine, and then we'll depreciate it monthly or weekly or quarterly or whatever it is. In this case, we're depreciating based on the usage of the machine. So the more we use the machine, the more depreciation we take. So if you do depreciation like that, that's going to be a variable cost. It says that March they expect to use the machines for 900 hours. 600 hours of the 900 is used for the custom dresses. The rent is for building space, $7,000 a month. Rent, heat, and light are allocated to the product lines based on floor space occupied. So here's the hiccup. It says that you have a valued customer, a wedding consultant who comes to you regularly, probably, asks for a favor. The favor is that she wants you to make a custom dress. Let's see. It says that you already have your 10 custom dress orders, and this is going to be above and beyond that. It says that you're going to have to give up some of your other business to make this dress. So again, the fact pattern shows that you already have 10 custom dresses ready or ordered, and you were scheduled to make 20 standard dresses. But if you take the special order, you're going to have to reduce something, either reduce the custom dresses or reduce the standard dresses. It says that you would lose permanently the opportunity to make up the lost production of standard dresses. Well, what that means is the status quo says you can make 20 standard dresses and 10 custom dresses. If you take the special order, you're not going to be able to make all 20 standard dresses, and you're not going to be able to stay up and work all night or something to make that up. So that's the scenario. If you take time off and you don't make these 20 standard dresses, you're not going to find time this month anyway to make it up. It says that you can't cancel your custom dress orders. So the only thing you can really do is reduce the number of standard dresses that you're going to make. The customer is willing to pay $24,000 for the special order, so that's pretty good because your custom dresses are usually $5,000, and this consultant is willing to pay $24,000, so it's quite a bit higher. Material is going to be $6,000, and labor would be $10,000 for the dress, so it must be a very nice dress. The special order would require 140 hours of machine time, and you're going to save 150 hours from the standard dress business given up. So it looks like you're going to save a little bit of money since you're not going to use 150 hours of machine time that you're going to use when you're making the standard dresses. You're just going to use it for 140 hours of machine time. All right, so now it wants us to calculate the differential operating profit or loss. Again, when we're doing these differentials, we're looking at only amounts that change between the status quo and the alternate. Because if it doesn't change, then it really doesn't make a difference to what we're trying to decide. So again, we have to make two columns, one for status quo and one for the alternative. And for status quo, we're going to have to put down the revenue, materials, labor, and depreciation. Remember, those are our variable costs. Luckily, we don't have to calculate these numbers because they're in the fact pattern. The fact pattern tells us that revenue is $80,000. Our materials is $18,000. Our labor is $29,000, and our machine depreciation is $900. So if you take all that, take the 80,000, you subtract your materials, labor, and depreciation, you get a contribution margin of 32,100. All right. Now, what about the alternative? The alternative is if you accept the special order. So again, the status quo is you're producing 10 custom dresses and 20 standard dresses. The alternative is that you are going to produce this special dress, but you're also going to give up some of these standard dresses that you make. So the fact pattern tells us that if we're going to take the special order, it says we can reduce the number of standard dresses produced in March to 10. So instead of producing 20 standard dresses, we're only going to produce 10. All right. So so now we're going to have to calculate our amounts for under the alternative. So under the alternative, rather the differential amount, we know that we're going to make that special order is $24,000, right? But we're also going to lose some money from the standard dresses. Standard dresses, we're not going to be able to make 10 of them, and we're going to lose. Let's see, if it's 30,000 total revenue divided by 20 dresses, we mentioned that was $1,500 a dress. So 1,500 times 10 is 15,000. So 24 minus 15,000, that would be a differential of $9,000. All right, so again, our special order is going to bring us an additional 24,000 revenue, but we're going to lose $15,000 of revenue because we're not going to produce 10 of these dresses, and each one of these dresses is $1,500. So for revenue, the difference is going to be it's going to be an additional $9,000 in revenue. Now for materials, the question tells us that the materials is going to cost us $6,000 for the special order. But we're also going to save some money from not making those 10 special dresses. And the math is pretty easy. We can do it in our head. The fact pattern tells us that materials for the standard dresses cost $8,000, and we're making 20 dresses out of that. So half of that, since we're only going to make 10 dresses, we're going to have half of that $8,000. So that's going to be $4,000 in materials that we're saving. So that means that for materials, materials cost actually goes up by $2,000. For labor, let's see, it says that labor, it's going to cost us $10,000 in labor. But we're going to save on direct labor too, because originally we were going to pay $9,000 in labor to make those 20 dresses, but now we're only going to pay half of that. And so half of $9,000 is $4,500. So that would give us $5,500 in labor. Sorry, it's not going to be completely lined up here. And then for depreciation, we were going to have 150 hours of depreciation to make those 10 dresses, remember, so we're going to save that 150, but we're going to spend an additional 140 to make this dress. So if you do the 150 hours minus 140, that means we're actually saving 10 here, and so it's just a savings of $10. Because remember that 1 hour is equivalent to $1 according to this fact pattern. So from here we're going to take a revenue of 9,000. We're going to subtract 2,000 from materials, subtract 5,500 from labor. But then we're going to add 10 because we're saving some money here on the depreciation. Not much, only $10, but still something that they want us to calculate. So you add all that up, and the answer is $1,510. So you're having additional profit of $1,510 if you drop those 10 standard dresses and create this special order. So if we're considering just profit, for question A2, it says, from a profit perspective, should Miss Nilly accept the order? And the answer to that would be yes, because you're getting $1,510 more profit. All right, and then for part B, it says, what is the minimum price that Miss Nilly should accept to take the special offer? Miss Nilly is being paid $24,000 by the consultant to make the special order, and that's giving her a $1,510 profit. So the minimum price that she should accept to take the offer would be $24,000 minus $1,510. So if you subtract that, then that gives you $22,490. So if the consultant offered Miss Neely $22,490 instead of the $24,000 revenue, she would be breaking even at that point, and so that's probably the bare minimum that Miss Neely should take, or else any lower than that, and then she'll be having a loss. I mean, hopefully the sales price would be higher than $22,490, but theoretically that would be the absolute minimum that Miss Neely will take for the special order. All right, and finally we're on question 6, the last question of the homework. This question deals with contribution margin per hour. So pay attention to this. You know, we've been looking a lot at just straight old contribution margin, but it really depends on how long it takes us to get that contribution margin or get that profit. You know, if two different activities both brings us $10 profit, but one activity takes me a year to do and the other activity takes me 30 minutes to do, then of course it's better to do the project that takes 30 minutes because you'll make your money a lot quicker. So just pay attention to that in this question. So the question tells us that Slavin Corporation manufactures 2 products, Alpha and Delta, and they have one machine, right? And so to produce each product, they have to use that one machine. The machine has a monthly capacity of 500 hours. Market demand for the 2 products is 150 units each monthly. Right now, the company is making 110 alphas and 110 deltas. And then it gives us some facts here. It shows the price of alpha and delta. So delta is actually more expensive than alpha. It's $150 sales price versus alpha is $120. And also delta's contribution margin is more, $64 in contribution margin for delta, whereas it's only $60 for alpha. So far it looks like delta is the better product. But we move down the chart and we see machine hours per unit. It shows here that delta, it takes 2.5 hours on the machine to make delta, but it only takes 2 hours on the machine to make alpha. So we need to figure out which product is better. And part A says, what is the optimal production schedule for Slavin? In other words, how many alphas and deltas should the company produce each month? Well, what we want to do is maximize the contribution margin per hour. So that's what we're going to calculate here. So for alpha, the contribution margin, according to the fact pattern, is $60, right? But it takes them 2 hours to make an alpha, and so that would be $30 an hour. Okay, and for delta has more contribution margin, so $64. And at first glance, that looks like a good thing, but let's go ahead and finish our calculations. It takes 2.5 hours to make a delta. So if you do 64 divided by 2.5, that actually is only $25.60 per hour. So again, at first glance, delta looks like the better product. It has a higher sales price, has a higher contribution margin, but it takes them longer to make a delta, 2.5 hours. versus 2. So delta actually has a lower contribution margin per hour than alpha does. Alright, so the question is, what's the optimal production schedule? So let's take a look at the facts. It says here that you can only make, the machine can only be used for 500 hours. So we're going to have to figure out how many of each product we have to make. Now we know that alpha is the better product, right? Alpha, we make $30 an hour when we sell alphas. So what you want to do is max out your alphas. So the question tells us that the market is only really going to need 150 of either item, so 150 alphas and 150 deltas. So let's go ahead and max out our alphas. So if we make 150 alphas, and it takes us 2 hours to make an alpha, that's 300 hours, 300 machine hours that we need. And the question tells us that there's 500 hours available, so that's perfectly fine. We can make 150 alphas, right? And we still have hours left over. So 500 total hours minus the 300 hours for alpha. So we have 200 hours remaining, and those 200 hours we're going to use for alpha. I'm sorry, for delta. So if delta, you have 200 hours and it takes 2.5 hours to make a delta, then that means that you can make 80 deltas. Part B wants to know if we change up our production schedule, how much will monthly profit increase? All right, so the fact pattern tells us that the profit under the original schedule is $640, and the way they got that was they were making alphas and deltas, and they made 110 alphas, and that was $60 of contribution margin. And deltas, they were making 110 also, and that was 64. All right, so 6,600 plus 7,040, that would be 14. 13,640, but then the fact pattern also tells us that we have fixed costs. The fixed cost is 13,000. So our profit is 640 profit. So that's that matches what shows on the schedule. So again, under the original fact pattern, or the original production schedule, we have $640 in profit. Now, under the new production schedule, we're still making alphas and deltas, but now we're going to make 150 of alphas, and we're going to make only 80 of deltas. So now when we do this math, 150 times 60, that's $9,000, and 80 times $64, that's 5,120. So our new revenue is 14,120, but we still have our 13,000 fixed costs, so we have to subtract that out until we have $1,120 in profit. So compare that to the 640 profit from the original problem, and that means that our profits increased by $480. All right, so this question really demonstrates that production mix is very important. If you own a factory or you're running some sort of factory or manufacturer in the future, you don't just produce blindly. You kind of have to see how much profit does each item bring, and how long does it take to produce each item in order. How long does it take to produce each item, and then you look at those two factors and determine the best contribution margin per hour, and then adjust your production schedule accordingly. All right, so that was the homework for Chapter 4, and then next week we'll do Chapter 5.